Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello and welcome back to the Fintech Times News and Views podcast brought to you by Vanta. Vanta helps you save time, money and build customer trust, all by centralizing program requirements and evidence collections for frameworks like Dora. If you want to manage risk and improve security, then head to vanta.com/fintech times to learn more. Francis, we are back once again, just us two. Polly was supposed to be here, but due to some technical difficulties that we've had to overcome, it's just us two again this week. But thanks for joining again. And how have you been? How's the week been going?
Yeah, it's been a very busy week here. It's been a good week. We've had a lot of responses for our monthly AI topic. And while we have had a lot of sort of similar comments, we also have had a lot of sort of unique points of view that perhaps weren't expecting to see. So it's been a good week. How about yourself?
I have been very good. Yeah, work-wise, very similar. It's been very busy. We've had a lot coming in. And it's been good to see your AI articles coming out. And for any listeners interested, they're coming out regularly this month on the Fintech Times website. And yeah, for me, it's been an extra busy week because I've just moved into my new flat. So got a lot of decorating to do, had a lot of moving in to do, but we're finally piecing it together. And yeah, it's been a good week and we've got some good, interesting topics to talk about. Why don't you kick us off with your first one, Francis?
Oh, congratulations on the house first and foremost. But yeah, on the topic of articles today, I'm going to be talking about pay by banks usage in the UK and how a new partnership is looking to accelerate its adoption.
Fantastic. And I'm going to be talking about new findings from the Financial Conduct Authority and the Payment Systems Regulator regarding digital wallet usage in the UK. But I think I'll let you kick it off this week and delve into your article a little bit more.
100%. So I think the reason this article stood out to me so much is that we spoke about pay by banks usage not that long ago. I think it was probably a couple of months ago. And I remember using it myself for the first time and sort of discussing it on the podcast and sort of saying, this is why I think it might be good. And we sort of shared our views on that. However, since then I saw this article and it said that in December of 2024 alone, 950,000 Brits tried using pay by bank according to the Open Banking Organization. And I just thought that was an incredibly sort of large number for something that perhaps isn't really spoken about all that much. So I thought perhaps actually it is something that's happening and the takeover is beginning. We're just not really witnessing it, which is surprising given that we work in the fintech sector and, we tend to see these trends emerge. But looking to expand the benefits and adoption of account-to-account payments in the UK, Token.io and Fabric have announced a new partnership to sort of accelerate the development and the rollout and just adoption really of pay by bank. So as I say, the new partnership looks to fast track adoption by providing Fabric's B2B and B2C customers with the ability to accept and offer open banking enabled A2A payments. The potential of this partnership could be far reaching, with estimations suggesting that 3 in 4 consumers will use pay by bank by 2029. So real-time pay by bank delivers substantial benefits over traditional payment methods, eliminating intermediaries to reduce processing costs and increase cash flow. Without manual entry of sensitive data, users authenticate payments directly from their mobile banking app for a fast, convenient, and secure payment experience. And like I said, we discussed it a couple months ago and its ease of use, but given these stats, I wanted to sort of see, do you think it's going to continue to grow and rival the common payment methods we currently have? And I think especially when debit cards start to expire, as in they all have an expiry date, but once, instead of renewing that card and then having to put in the new details each time, will people just be lazy and click pay by bank instead of having to sign up? And will that then be the sort of the catalyst that takes us forward? I wanted to get your views.
Yeah, pay by bank is a really interesting one. I'm always interested to see how it's doing because when you really look into it, it's a really useful payment solution. But it's quite hard to get your head around why it's different to the payment solutions that we already have available to us. And I think, that's a case for me And our literal day job is looking into fintech, looking into different payment solutions that are being developed and introduced. So I can see for the everyday consumer why it would just be really hard to get your head around why pay by bank is different to other payment options. And I think that's probably going to be the biggest challenge for pay by bank to overcome, is that sort of education aspect of, well, people aren't going to use it unless they understand what it is and what the benefits are compared to their usual methods that they use. And I think that's probably the thing that comes to mind the most. And that's why I think the stat that nearly 1 million Brits tried to use it at the end of last year really hits home. That it's actually already doing quite well and probably exceeding my expectations given the challenges that I just explained. But I think probably the main thing is just introducing it in more and more places. I know that the one that for some reason comes to mind the most, I think we spoke about it last year, was when Pay It by NatWest, which is their pay by bank solution, was introduced into Weatherspoons. And when you go to Spoons, that's a payment option now when you pay on the app. And I think that kind of thing, that just rolling it out into really big brands, making it accessible across the whole country, that's the type of thing that will really catalyze this kind of growth of pay by bank. And I think that's what really I think about it. It's just the fact that I can see it growing, but they need to make sure that Pay It by NatWest and the other pay by bank solutions need to make sure that it's being rolled out as far and wide as possible. Otherwise, I can see it stalling a bit. But the growth that the article that you're talking about shows is really promising, and as it suggests, I think we are going to see an increased sort of usage of it as time goes on.
Yeah, definitely, and I think that's an interesting point about Weatherspoons and sort of like the long-term adoption that we're going to see by like expanded options and services like across the country. I think interestingly as well is one of the big selling points of Pay by Bank is that for an organization to offer it, it has to have been approved first. Not any old sort of startup can just say, oh, well, here's Pay by Bank, They need to have gone through like a rigorous process to ensure that they are well within their rights to sort of offer this as a payment method. And another interesting point about it, I think, is that with digital wallets' popularity and how easy it is just to sort of click Apple Pay or Google Pay, that doesn't require authentication from clicking out of the payment section of, you just double click 2 buttons and then you're there, and you use your biometrics to sort of authenticate the payment, but you don't need to go onto another app. It's very, very seamless. And I feel like if you're on Safari or, on Google and you want to make that instant payment, I think having seen that it offers Pay by Bank, that's just going to encourage you to think, well, this is safe, rather than thinking I can use that app, if you know what I mean. I think it's, once you have the payment method on your phone in your digital wallet, I think it's very hard to see why you'd want to use Pay by Bank, something which takes longer to make a payment than to not, if that makes sense. I think it's, in a world where Google Pay and Apple Pay are so accessible, I think Pay by Bank will probably struggle.
No, I agree. And I think another thing to keep in mind is obviously the idea of rolling it out is really important, but there's also the fact that these merchants that want to adopt it, they want to be able to have the options available to them. I think that's why the partnership like this is really important, because it just opens up more opportunities for merchants to adopt it, and therefore bolster the sort of adoption of Pay by Bank over time. But with that, I think it's a good time actually to move over to my article, because obviously you were speaking a little bit about the usage of digital wallets to pay, and that's what this article is all about. So the FCA and PSR have revealed their findings about digital wallets, which are rapidly increasing in popularity across the globe, not least in the UK, as we know and as you've been saying. But in fact, digital wallet usage has more than tripled between 2019 and 2023, with the proportion of card transactions using a digital wallet increasing from 8% to 29%. Now, obviously, these findings just show that more and more people, as we kind of would expect, I guess, are using these digital wallets. And there are further stats to back that up. For example, they found that the proportion of consumers relying on pass-through digital wallets for most of their card transactions is also growing. So in 2023, approximately 20% of card users used a digital wallet for over 50% of their card transactions. Now, the reason that this kind of came as interesting to me is because the findings come as the Competition and Markets Authority conducts its 2 investigations, one into Google and the other one into Apple, over their control over mobile ecosystems. And the CMA basically aims to ensure effective competition in these mobile ecosystems to give businesses the opportunity to innovate and deliver services and technology developments to customers, including but not limited to digital wallets. So one of the FCA and PSR's most important findings after speaking to industry stakeholders is that digital wallets represent a significant opportunity for innovation and growth, given the fact that consumers benefit from a more seamless and efficient payment journey, including enhanced authentication security measures and a greater financial accessibility for underserved groups. Now, first of all, I just wanted to get your take on the findings. Is this kind of what you'd expect with digital wallet usage? And with that in mind, what do you think the sort of future should be in regards to these sort of regulators' approach? Do you think it's got to make sure that the likes of Google and Apple really aren't dominating the space and they increase innovation, or is there another route you think they should be taking?
I mean, in answer to your questions, I think this is massively what I'd expect. But from a regulation standpoint, I don't think there's necessarily so much more that regulators can do to make the ecosystem more diverse. I think at the end of the day, consumers are going to use what they're used to already and what they're comfortable using. I think so long as that there's an option for, these competitors and new sort of digital wallet organizations, so long as they have an opportunity to get involved and to make their offering sort of stand out, I think that's what's important. But I think realistically, for consumers to actually be driven away from Apple Pay and Google Pay and things that they're used to, I don't think there's anything that regulations can do that would make that happen necessarily, unless there was a huge scandal or something that came out about Apple or Google and how they're using these digital wallets for data or something like that. That's the only reason I can think that their popularity might be sort of taken down a couple of notches. Other than that, I really think that so long as the opportunity is there, and I suppose that's what the whole point that the CMA were trying to say, is that there needs to be an equal opportunity for an organization to make its offering available and to if you've got, for the longest time, Apple didn't let other digital wallets onto an iPhone, for example. And I think that was a big issue, and sort of that sort of thing requires some regulation and sort of, something to control it and make sure that the opportunity is there for a startup. But at the end of the day, so many consumers already use Apple Pay and like the way it works that I don't see it being a threat to these two sort of juggernauts of the industry. I think they're really going to stay ahead. And the only thing that can really happen is, provide an option, for the consumers. But at the end of the day, I don't think the consumers are necessarily going to abandon what they already know just like that.
Yeah, I completely agree. And I think it kind of creates an interesting point because obviously the whole point of the investigations is to make sure that there is a competitive nature to the market and that, new firms can come in and provide disruptions with new developments. But I think as we've spoken about so many times before is the fact that actually there isn't much more you can do in terms of, we really do have a near like instant and seamless payment with, say Apple Pay and Google Pay. The biometric authentication is very, very popular. It's very quick. It makes people feel safe when using their payments and using their digital wallets. I think it's just overall just a clear, it's just a fantastic solution. It's hard to see, as you said, why other people would move from that when they're already enjoying and finding this so safe and they trust it so much already. But another thing you alluded to was obviously the sort of EU regulations, like Apple opening up its NFC technology to third-party developers in 2024. And I think that kind of thing is just important to make sure that these opportunities are available for developers to make sure that the digital wallet space does evolve. And obviously if there are a new disruptive sort of technologies provided by companies, or there's better security that they can roll out. I think that's just to the benefit of everyone involved throughout not only the industry but also consumers. So I think, as you said, I feel like they're going about it in the right way. These investigations are important to make sure that they are competitive and that Apple and Google don't hold such a sort of duopoly over mobile ecosystems that if they would just kind of stall because there isn't that competition, and that's to the detriment of consumers as well. So yeah, I think it's a difficult balance, but it'll be really interesting to see how, especially digital wallets can evolve over time, because as I said, we already feel like we're kind of at the peak of what a digital wallet can be, and it only seems like it can go less seamless than it is right now. So that'll be interesting to see in the future. But with that, I think we've wrapped those topics up very, very nicely. And we'll move on to our final segment of the podcast this week, which is what I learned this week. So every single week, so much new news and insights crosses our desks. So we like to pick something a little extra to share with our listeners. So Francis, what is it you have learned this week?
On the topic of, I suppose, financial inclusion, but also payments, the Kareem Pay has launched its remittance services into 18 new European countries. So that's connecting the UAE to, I can't remember, I think it was Austria, Belgium, Croatia, Cyprus, Estonia, Finland, Greece, Latvia, Liechtenstein, Lithuania, Luxembourg, Malta, Monaco, Netherlands, Portugal, San Marino, Slovakia, and Slovenia. And I thought that was just a very cool way to make payments more seamless across the region.
Fantastic. And that was a hell of a tongue twister there as well. And this week, one of the stats that really caught my attention came from Revolut, which revealed that women investors are outperforming men and actually earned 4% higher profits on their investments in 2024, as the neobank highlights just how the investment gap is closing and how women are potentially underestimated in the investment space. But with that, Francis, thank you very much for joining me this week. And next week, I believe we will have a special guest joining us. So make sure you tune in. But Francis, I will see you then.
See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.